Okay, welcome back to the channel, everyone out there on YouTube. I have another great video for you guys today. Stay tuned and watch the video because this video is really going to identify how to look for breaks of structures and to get into quality, yes, quality supply and demand setups, okay? If you're looking for or trying to identify what zones to really take your trades from, we're going to talk about that in this video here as I cover 3 things that you really need to know when it comes to identifying breaks of structures and what to really look for so that it helps you qualify, okay, yes, which zones to take your trades from, okay? So let's talk about that now in this video here. And what you see here on the screen is just a diagram or an example basically showing you market structure. The reason, the purpose why I have this is because we all know that price can only do what? Move in 2 directions, up or down. So in this case here, we see price doing what? Trending to the upside. So picture this as if it was your higher time frame chart, because your HTF, which is your higher time frame, you should always be looking at as your starting point to get a reference if, try to depend or decide which way the market is actually trending. Is it moving to the upside? Is it moving trending to the downside? Or are we in a range where the market is moving sideways? Okay. So in this representation here, we see the market doing what? It is clearly making higher lows and higher highs as it moves to the upside here. Now these circled blue areas here are the high points or the high areas. Okay. So we want to see price making a high, a low point, which is a higher low, higher high, followed up by highs. So this is what we classify as price making new highs, all right? So when we see structure like this, we're looking for what? When price is making, all right, or creating new highs as it moves higher, especially when the market is trending, we are trying to identify great areas to take demand setups, okay? Again, we're covering supply and demand in a nutshell, trying to identify those zones, okay, those areas to where we can basically wait for the market to retrace back to get into a proper or qualified entry, okay? Now, we do know not every supply or demand zone is going to do what? Hold its ground, all right? So there are things that we have to do as traders to do what? To really classify if that zone is going to, stand its ground, all right? And that's called rejection, looking for the confirmation and things like that, which I talk about, into basically the steps of what, or the steps of what helped me qualify and how to or when to get into a trade, okay? But taking a look here, we got the direction to the upside right here, okay? So picture this. For me, this would be like my 60 range chart. It could be a 60-minute chart for you. It could be a 4-hour chart for you, or 1 hour, whatever is your higher time frame chart. For me, I'm looking at this as if this is my higher time frame representation, and we are going to go down to this lower time frame to kind of not lower time frame, guys. I'm sorry. Go down or use a chart with actual candles on it to identify what I'm trying to talk about here. Okay. All right. So what we see is I marked up the direction. I've marked off some demand zones as well. Okay. All right, so take a look here. Even though price is making higher highs and higher lows, and we got breaks of structure points as price makes new highs, all right, price pulls back to this zone right here. Now, this will be a demand zone, okay? If you don't know much about supply and demand, please learn it. For me, it's my bread and butter of how I trade. Everybody does have their own strategy and how they trade certain setups or, just certain things that go on in the market, whatever the case is. But find something that works for you. You may trade just support and resistance, okay? I don't trade support and resistance, all right? But because the reason why supply and demand is so important to me is because you're getting in at the origination point where the move actually took place here. So for instance, right here, price made a high, higher low, higher high. It pulls back, okay? Pulls back to a demand zone, and this will be the area where the origination or the move started moving to the upside here when it broke this area of structure right here, okay? So we look for a pullback to the origination area, okay? This area of demand. Now, not all times will a area of demand, even though it looks like it's a great, swing to the upside, breaking structure, and it pulls back. will it hold its ground? Okay. We as retail traders don't control that. The banks and institutions do. They decide, where they want to take liquidity at, where they want to take the market to, at what points, all right? And they decide when they want to turn the market back around, okay? Understand that they have the money that is the driving force to the markets, all right? So the market comes back to this zone here. Now we're going to use this as an example, as if it was to basically reject this zone here. And then, sometimes what will happen here is that the market may not clearly stop here. It may burst right through this zone here and test a zone right below it, okay? Now, where lots of traders get into trouble is that they want to immediately get into a trade the moment price taps into the first zone, okay? So the thing what I'm trying to really help you identify is that look at your higher time frame. Go ahead and mark up some areas on the higher time frame, supply demand zones, okay? Because one of the biggest things that will help you out in your own trading, I tell people this all the time, is to trade with the trend of the market. Figure out what the market is trying to do. It can only move in two directions, down or up. In this case here, it is moving to the upside, as you can see here. So go ahead, act as if this is your higher time frame example, okay, diagram what I have here on this chart, and go ahead and mark up your demand zones if the market is trailing to the upside or trending to the upside. I have one zone here, a zone here, and this could be another zone down here. But I went ahead and marked these two zones here because they are the closest zones to price after price made this last high. Well, actually the last high would be right here, but after it made this high here before, pulling back. So this is the first zone, the second zone. Again, like I said, sometimes price will just move right through the first zone, okay, and move to the second zone. So you have to wait till price once it gets tapped into a zone to see if it's fully going to reject. And we'll talk about the rejection piece of, knowing when to get into a trade, a little bit into the further steps in this video here, okay? So there's 3 steps that I want to talk about. So number 1, the breaker structure, okay? We've got that, okay? All right, price pulls back to our, say, this area of demand here, okay? All right, so what we look for now, okay, as if we're moving to the second step, would be definitely trying to figure out, is there an area where there's aggressive buying at the origination point? So we want to see a lot of thrust or a lot of push to the upside, meaning a lot of volume, momentum, pushing to the upside. That's going to help us classify a demand area that came out of the breaker structure to the upside. So we got the breaker structure. Then, as price retraces back, try to find an area, all right? Okay? Typically, you're going to find that back at the lowest portion or lower area of coming out of the area where there was a breaker structure at, primarily the lowest point back within that area of structure there, okay? So this was the origination point, so the price pulled back here, and we look for something to, happen in this area on the pullback, okay? So now we'll move forward, but first and foremost, what I'm trying to say to you guys out there and gals is that use your higher time frame, okay? This is just a reference as, we were looking at our HCF to try to identify the overall trend of the market. So this is the first approach, is looking at what's going on a bigger scale or bigger picture, okay? All right, so now that we pull back into the demand zone, okay, we look to clarify and also qualify what is to take place. Is this going to be the stopping point to where, say for instance, the banks or institutions are going to be interested in taking the market back up, all right? So the next step, which is going to be looking for the area of aggressive buying coming out of a demand zone, all right? And we'll take a look at that on not a lower time frame, but on the candlestick charts or the candle charts when we move over to that. But I just wanted to use this model here to let you know that always take a look at what's going on a higher time frame and trade in the direction when you scale down to your lower time frames in the same direction of whatever direction the market's trending on your higher time frame. All right. So now we see, if this is my 60 range chart, or maybe your 60-minute chart, or maybe your daily chart, or whatever your higher time frame is, trade in the direction of that. Yes, sometimes you see me take trades purely off my 12 range chart, but I'm trying to tell everyone right now that if the market, say for instance, was moving higher on the higher time frame, and then you see me take a short on a pullback to a supply area, even though the higher time frame is moving to the upside, it's just for a quick entry, all right? Because I know, and looking at the higher time frame, what the market is really trying to accomplish. So if I see a intermediate type setup, a short setup, to where I have the chance of taking a entry at a supply zone for a quick scalp, I'm going to take that, which is counter trend trading, I know, but that just comes with time and years of experience. If you are someone that's a new trader or a beginner trader, I would recommend you definitely, okay? It is the best thing ever when you have your higher time frame and you're trading in confluence with the lower time frame as well. Both time frames are moving in the same direction, so take the trades in this direction of, you know, how both charts are really trending, especially the higher time frame. Moving to the upside, making a breaking structure to the upside, making higher highs and higher lows, then scale down and look for a pullback to a demand area to take your trade back going to the upside, all right? So with that said, now let's say price pull back to this area right here, where this box is right here. Okay, now if that area had already been mitigated, already tested in a sense, and I shouldn't use test because a lot of traders are thinking, a lot of people on the channel that follow are a part of the Discord, they think that, okay, this is the first test here, back to the area here, then the market's probably going to push higher, so they'll take a trade on a demand setup. No, what I mean by test is if the area when price pulls back to your demand zone, okay, out of that breaker structure, you know, we got the breaker structure right here, look for a demand zone in this area here. If there is a demand zone where there is significant, you know, buy-in or high volume back to the upside, and that is a demand zone, okay? If there is an area where there is an imbalance or gap at, that's going to give you a higher probability chance to take a trade going long, all right? If that area that you classified as a demand zone, okay, somewhere back up in here, all right, where there's a high volume at, or lots of momentum coming out of it as it blasted back to the upside, price retraced back to it. If there is no imbalance there or no gap back at the demand zone, I tend to not trade at those zones, okay? Because it makes the trade setup low probability. Yes, it still could be considered definitely a demand zone, but for me, I just oversee those areas. I don't take those trades 9 times out of 10 because of the fact it's just not high probability setup. There's no gap, there's no imbalance. You have to understand, once a zone has been mitigated, once a gap has been filled, okay, more than likely the banks, institutions have transacted at that area, and they are no longer looking to do business in that zone. So what happens is, if this was the demand zone right here and it was mitigated, transactions had already taken place, they were no longer interested in the zone here, what do you think is going to happen? They're going to push price right through that zone back down to another, say, demand zone below it, okay? And if this new area, if there's a gap or imbalance resting at, the chances of price rejecting this zone right here, okay, once price blows through this first zone, gets to the second zone, the chances of them, mitigating transactions again and to, fill orders, it's going to be high. It's going to be more higher, okay? It's going to be more highly likely that they're going to, reject this zone here or bounce from this area here, fill orders, and the price continue pushing higher. So be mindful of those imbalances or gaps, and we'll show that on the candle chart when we move down to it. So also, but like I said, pay attention to the higher time frame, because lots of times you'll see the market do something like this. It'll make this high point here, right? And then it will turn around. It'll do something like this right here, pull back, and then it will break lower. It'll break structure here back to the downside, meaning taking out this low here. All right. Now, does that mean that the market has completely shifted? No. This could be just a deeper retracement to push the market to do what? To really just push it back up, pull back, and then boom, blast back up to the upside. Now, is this considered a breaker structure when it breaks this low point right here as it moves down to the downside, makes a low here, low high, and then breaks structure right here as it makes its final tip to the downside? Yes, it could be. Could this be classified as a supply zone? Yes, it could. All right. But you have to be mindful that once price starts turning around and making higher highs and higher lows back to the upside, as it did right here, high, higher low, breaks higher, primarily once it breaks or pushes through this area, which could be a supply zone right here, it's attempting to push higher, okay, to take out liquidity at the back, at the top end here, and to continue pushing higher. So be mindful of things like that, okay? Price action. Pay attention to the structure of the market. Structure is the most important key component to trading. Understand that, all right? All right, so follow your swing points off the higher time frame, okay? Another thing I want to talk about before we move down to looking at the actual chart itself. Now, what we want to focus on here, being that we are in a bullish uptrend on the higher time frame, what was the, I guess, last movement in either direction? In this case here, because we're bullish, the last push to the upside. Where did it come from or out of? This area right here where price made a high, pull back, okay, retraced, made a higher low, and then it pushed to the upside. So we're going to focus on this area right here, all right? And we're going to basically mark off areas of demand, all right, or try to identify some key areas of demand off the higher time frame, and then we'll move down to the lower time frame. So we're looking for a break of structure, all right? So we got a key area of structure break, okay? So we want to, focus on the external structure of the higher time frame, okay? It's pretty much what we're looking at here, all right? So this being the last push to the upside, now what we need to identify is where is there areas of break of structure, number one, okay? And which will help us identify those demand zones, all right? So what we see taking place right, let me grab this, is here, okay, where price pushed to the upside, all right? It made these highs, okay, higher lows, and then it broke structure to the upside. All right, we see that, right? We talked about swing points in the diagram or the examples where I was using prior to moving on down or taking a look here at the candle, the chart itself. Now we can just simply use, the ellipse in a sense and mark off our highs and lows, okay? This being a low point, this being a high point, this being a low point, and then this being a high point up here as price continue pushing higher. Now the next part is identifying the break of structure, okay? Or breaks of structure on this move to the upside here. So we have this low here with a push to the upside, making price making a high, pulling back, making primarily a new low here, okay? Or a lower high if you want to classify it like that. And then a push to the upside, price makes it a new high here. Now, you got to identify, again, that area of break of structure, which would be right here, okay? So basically at this area right here, okay, right here, above this area here, as price pushed to the upside, it broke structure right here because you have a high followed by significant pullback here, all right, where it made a low before it made a major push to the upside, okay? So breaking structure at this point right here. So the very next thing we want to identify, okay, after we have marked off, okay, the break of structure, where did it originate from, okay? Where did the movement as it pushed hard to the upside or thrust to the upside, where did it start at, okay? The starting point was right here, okay? So what we'll do is we'll go ahead and mark off that zone, all right, using a rectangle, okay? So right here to the bottom, draw it out, okay? This is our demand zone. This is the area where there was aggressive selling to the upside. Again, like I said, to identify a demand zone, okay, because that's what we're referencing here, is an area where price, all right, the origination point where price pushed to the upside to break the area of structure, all right, where there was lots of volume, lots of momentum pushed to the upside. This area right here, okay? So one, we identify the break of structure, okay? Two, we identify the area of aggressive buying, lots of buying volume to the upside, the origination point, okay? All right? Within that, okay, I'm trying to say within that, all right, we also want to identify, are we in a premium or a discount area? Remember, when we're buying, we're looking for those discounted prices to get into where prices are cheaper at. So, like again, I said you can use the Fibonacci retracement tool. I'm not using the levels in a sense to trade from, but mark it from that last origination low point back up to the high to see if you're below the 50% area to where prices are discounted, okay? Now, we are. The 50% is here. We're back down in this area here. If price retraces back into this area, then we're looking to take or be interested in taking an opportunity to look for long entries, not off of the higher time frame, but once we get back to this zone, we're looking at this point to scale down to our lower time frame chart and kind of refine the area of our entry point. Okay, so the next thing is also, as part of step 2, identifying the demand, identifying the aggressive buying, identifying if there is an imbalance or gap back at the area of demand. In this case here, look at this. Okay, these are all the steps which will help you identify a high probability setup. All right, just this past couple of days, someone, a question was thrown out there in Discord in reference to whether the zone wasn't tapped yet or it wasn't tested yet. I'm not talking about the first time that it actually came back to the area. I'm talking about, was there a gap, an imbalance at the area of the demand or supply area, okay? Once price pushed to create or broke structure and left behind or create that area of demand where there was a significant amount of volume, did price, once it broke it, did it come back to the area? Look, when price made this push to the upside right here, as it broke above this last red candle or last down candle to the downside, did it immediately come right back to it and fill a void, or not a void, a gap, okay, or an imbalance? No, it did not. It continued pushing higher, which left us with an imbalance here. We're talking about once price broke above this red candle, okay, did it immediately come back and tap into or fill that gap back at that red candle? No, it didn't. It kept pushing higher. So it left a gap. So primarily it left the gap, I'm going to show you, from the top end of this red candle. Just imagine this, what this arrow line is. Continue pushing higher. It pulled back some right here. And when it pulled back right here. The bottom end of that, say, red candle right there. So it left an imbalance or a gap in between from here back down to the origination point where the demand zone rested at, where the high volume came at as it pushed to the upside. All right. So let's take those arrows off now. Now that's our gap. That's part of the step 2 process, which again helps us qualify if this area is going to be a zone to where we can look for possible rejection in. All right. So now what's next? We simply wait for price to retrace back to this area. Now we haven't gotten there yet. Okay. And it can take some time for us to get there. But if you wait patiently, I'm not saying it's going to happen within 1 day's trading period or session. It could take a few days to unfold, but you can almost be, I'm saying guaranteed in a sense, not providing any kind of warranty to say that it's actually going to work. I'm just telling you that there's a higher probability setup or chance that when price works its way back down to this zone here, there are going to be orders that are going to be filled there again, because they're not finished in this area here, okay? Because price moved away from it too quick. So at this point here, we want to, the last step is wait for price to tap back into the area of supply, to the demand here, okay? And we, again, third part of the process is to look to see if you are, if price is pulling back down to an area where there's a discount, meaning cheaper prices at, okay? 1, break a structure. 2, go ahead and look to see, identify your demand zone, in this case here, all right? It could be supply in reverse of, and to make sure you have an aggressive buying coming out of that area. And then the third part is, well, not third part, we want to, still part number 2 is to make sure we got a gap. So part of number 2, okay, step is to identify the demand zone, an area where there's aggressive buying at, meaning that we're an area where there's lots of volume that came out of as price broke structure to the upside, okay? You also want to make sure you got a gap there. Number 3 is making sure when price retraces back to it that we have we're looking to buy at an area where there's discounted prices at, okay? Below that 50% retracement area or Fibonacci area, okay? Now, before we scale down to the lower time frame chart, you may be asking yourself, well, if price pulls back to this zone right here, this area right here, will this be classified as a demand area too? Yes, it is. To me, it's lower probability, but it could come back to this area right here, all right? And orders could be filled again, all right, to push the market higher, okay? Why? Because this is a demand zone, aggressive buying to the upside, broke structure as well to the upside. So this is a zone, this is a zone. The difference in between the two is that this is a lower probability setup, this is a higher probability setup because we have a gap back at the area demand here. Here we don't have a gap. Why? Pay attention. The last down candle to the upside before the push to the upside where there's aggressive buying, look, as price pushed higher, What did it do as it broke this last red candle to the upside? It came right back to it. It filled the gap right there, okay? So which means that as it broke higher, they came back to fill more orders, okay? So price was, this area was mitigated, okay? I'm not saying that they cannot come back there and, transact at this zone again or this area to push the market higher. It could definitely happen, okay? So you have to make the choice and see once price gets to that zone, are you the type of trader that wants to trade that area again? For me, I'm a higher probability setup trader, so I'm looking for price to come to areas that where there's a gap that's left behind. Okay, all right. So now we're going to move on down to our lower time frame chart here. Now price hasn't come to this area here, but we're going to look to kind of see what took place or what if there's an area of demand in this area here on the lower time frame chart with a gap. Okay, now I've scaled down to my 12 range chart, which is my lower time frame chart, okay, outside of my higher time frame, the 60 range chart. This could be a 5-minute chart for you guys, but just make sure that you're using a higher time frame and a lower time frame. What I'm looking for now is a untapped area, okay, meaning an area where there's a demand area where there is a gap at, okay. That's what I'm looking for, all right. That's what I'm looking for right now to be able to enter into a trade. Okay, so now that I'm down on my lower time frame chart, I want to refine an area. Find an area. This is that zone from the higher time frame. Now I'm down on the lower time frame. I want to refine the zone because now I am zooming in and trying to clarify off of the lower time frame where there is a demand area or zone with a gap. Okay, now when I see this move to the upside right here, price making these higher highs and higher lows, the only area I really see where there's a gap at, say for instance, would be this area right here. Now, because look, as price pushed higher and pulled back and broke higher, look, it filled the gap when it came back, okay, right here, look, to the T. This last down candle to the upside, when price pushed up, it came back, it filled what? It filled the gap right here. So which means orders were transacted and the market continued pushing higher. Even when it pushed up here, the last down candle to the downside would have been this candle right here. Price pushed higher, it came back. It pushed higher, last down candle was this one right here. And let's see, as it broke higher, actually there is, let me see here, last down candle, price pushed up here. I'm taking a look, guys, so please forgive me. Oh, right here, it did come back. Okay, so yes, that would not be included right here because look, last down candle, price pushed higher, okay? All right, it pushed higher. It broke it right here to the this candle right here, this red candle. That green candle broke it to the upside, taking out that red candle to the downside, and then this candle here comes back with that wick. So the area what I would be focusing on would be, let me show you. There's a small gap on this move. As price moved to the upside, I'm refining my zone. Right here, pushed up, pulled back, boom, broke higher. Last red candle to the downside, the top end of that wick, when price broke it with that green candle to the upside, it came back. Within 1 or 2 ticks, it still has not filled in that imbalance area. So there's an imbalance here. Very, very, very small imbalance. Okay, oops, cancel that. This is the zone here. From here to the bottom end of that green candle is our demand zone, okay? All right. This green candle broke that last red candle to the downside. As it moved higher, that green candle took it out. The next candle did not come back and fill that gap in. There's still a void there, an area there that price has not filled that gap yet. So what you do is you wait for price to come back to that zone. Once it comes back to that zone, I use the volume profile as well because look, price is below the high volume area once it taps into the area. You want to look at the buy, like I said, discounted areas where price is cheaper. So we've marked that discounted area on our higher time frame. We've defined it or refined it down on our lower time frame as well, in a sense, with a gap. The probability of price transacting or rejecting the zone is higher, but we have to wait for price to get back to the zone on the lower time frame. Once it gets back to that zone on the lower time frame, what do we do then? The last step, which is also included as step number 3. Step number 3 is defining the if price is in a premium or a discounted area. Because we're looking to go long, we're looking for discounted prices. The last step as part, which is included as part of 3, is to identify if there's going to be a rejection. How do I identify a break or rejection? I pretty much look for a break of a candle in the opposite direction, meaning the last candle when price retraces back to our demand zone, which is going to be a red candle, if the next green candle is going to take out that red candle, breaking it back in the opposite direction. Once it does, I go long, okay? So that pretty much, that's what helps me qualify a high probability, in this case here, demand setup, all right? So number 1, use your higher time frame as your reference point to identify what the market is trying to do, okay? Then use your, like I do my strategy. I use number 1 to see if we got a break of structure, all right? Then I'm looking to see it and mark the demand zone, the area origination point, the area where the aggressive buying came out of, okay? All right? And then I'm looking for, as part of step number 2, the gap, all right? If there's an imbalance, all right, on the higher time frame, that helps me out. Once I've identified that, then I'm moving down to my lower time frame chart. Move down to the lower time frame chart, refine the zone by looking for a aggressive buying area or zone within the bigger picture or the bigger zone, which you classified or marked up on your higher time frame chart. Just refine it once you get down to the lower time frame. That whole zone was right here. I refined it back down to this area here because this was the only area when I looked at the push to the upside right here that had aggressive buying, coming back to the upside with a gap. All right, so I'm looking at this zone now. I've marked it on my lower time frame. Last thing is to look for the break of candle in the opposite direction, which helps me clarify and if I should be looking to go long. So you may be also asking, can you use this same strategy or setup, looking for those 3 steps to occur, all right, on 2 lower time frame charts, maybe the 12 range and a 4 range, or 5 minute and 1 minute. I'm not saying that time-based period is comparable to a 12 range and a 4 range chart. I'm just saying, can you use 2 lower time frame charts to wait for the same things to happen or occur? Yes, you can. Okay. Now the moves may not be as big or as great because you're using you're using a higher time frame, like the 60 range and a 12 range chart. And then maybe you can use a 12 and a 4. Yes, you can. I think and I know for sure that if you are using and trading in the direction, basically stating that using 2 pair charts together, and this is the strategy. I've been talking about this for months that that works. Using 2 pair charts, meaning you are following direction. When you take your trades off of the lower time frame chart, you are following direction off of a higher time frame chart. So if it's a 12 range chart, say for instance, and the structure to the upside, okay, then we want to be looking for structure to the upside as well to take our trades going long on the lower time frame. Same thing, okay? Following the same direction on two charts. It works hand in hand, all right? So basically, lots of individuals may not have the patience to sit there to wait for price to pull back on a higher time frame chart, like a 60-minute chart or 60 range chart or a daily chart, whatever the case is. They got a demand zone resting and they're waiting for it to come back, and they're so itchy about getting to a trade and they can't wait. Then scale down to two lower time frame charts, still using one as a reference higher time frame, and then the second one as your lower time frame, and look for the same type setup to happen. All right, that's it, guys. I'm wrapping the video up. If you're interested in joining a great Discord community where we have traders that trade the futures, there's a trading floor set up on there to where we as traders, we share our trade entries, levels, zones of interest. We screenshot those trade entries. Come and join us by finding the link to the Discord down in the description portion of the video. Click on it, invite yourself in free of charge, and you can find the trading floor. There's also a channel on the server that's, I guess it's noted as or named general chat. That's if you have questions pertaining to the future markets, and maybe someone that's a beginner trader and you're looking to possibly get some answers, or questions answered for you. Okay, there's going to be someone on there. It may not come from me, but it could come from a group of individuals as well that has good answers as well that are part of the Discord. If you're interested in becoming an elite member, I get this question all the time. How can I become an elite member on the channel. This is over on the YouTube channel. If you find the link that says membership, click on the link. You may be asking what it is. It's just a tier program that basically you as a viewer, you as someone who's interested in becoming part of the channel, becoming a subscriber, that's maybe wanting to understand or grasp the strategy of how I trade. You just basically support my content here on the channel, guys. A content creator's content, supporting their efforts, but you also receive perks and rewards behind that. And there's 2 tiers: the loyal channel supporter and then the elite channel membership tier. Pretty much everyone has signed up for, those that have signed up for the elite membership tier. They may be asking why. Because you get everything that's included in the first tier, but with additional perks, like the trade breakdowns, where I discuss in detail my entries, as if you were kind of sitting next to me. I walk you through the process and discussing step by step what I was thinking up to, or which led me up to taking a trade, as well as you receive the playlist of videos to where I've hand selected. Yes, you don't have to sit here and look at all 400 videos. It's a playlist of videos where I've hand selected, I believe, are good trade videos, or videos that cover the premises of how I actually trade, covering my strategy, okay, that I actually trade, okay. But outside of that, that's all I have for you. If you're interested in becoming a member, just find the membership tab on the homepage on the YouTube, okay, channel. Click on it, and you can choose which one you maybe want to sign up for if you do it all, okay? But they are there, and tons of individuals have found them very helpful, okay? Especially the elite membership, because you get everything, the trade breakdowns, the video playlist, things like that. So that's all I have for you today. If you are trading next week, guys, please be safe in the market, as I always say. And I look to see everyone in next week as we push through the holiday weekend and get rocking and rolling again. Take care and have a safe weekend.